We did it!
The board decided today to cut the cash rate by 25 basis points.
After a lot of blood, sweat and tears, the RBA has dropped interest rates by 25 basis points to 4.1%. And all four big banks are going to pass this rate cut in full to variable home loans with different start dates. Will this be the last rate cut for a while, or is there going to be more this year? That's what we're going to break down in this video. So the big four banks are a little bit split in their predictions on where interest rates will go for 2025. ANZ Bank is predicting only one more rate cut in August, which will bring the cash rate to 3.85%. And the other three big banks, Commonwealth Bank, NAB and Westpac, are predicting 3 more rate cuts, one each quarter from now until the end of the year, which would bring their target cash rate to 3.35%. So even though it's only one rate cut at the moment, the best thing that this rate cut can do is create a bit more competition among the banks. The average Australian interest rate on a variable mortgage is around 6.27%. So after this rate cut, some experts have suggested, with a bit of shopping around, that homeowners might be able to get an interest rate that starts with a 5.
What we will see is a reignition of the refinancing wars, or I certainly hope we will, because the more people that pile in and start looking at their mortgage rate, looking around at what the competitors are offering, the more likely the banks are going to be fighting it out for competitive rates. We could see the lowest variable rate drop to around 5.5%, but we also could see, I think it's about 60 different lenders offering a variable rate starting with a 5 once this rate cut gets filtered through. So if you're an owner-occupier in particular, but even as an investor, stretch target, aim for a variable rate, if you want a variable rate, that starts with a 5.
Now, I'm not a licensed financial advisor, and this video should be for education and entertainment purposes only. But make sure you put a bit of pressure on your bank. Speak to your bank, speak to your mortgage broker, speak to your financial professional, and make sure that you are getting the best interest rate that you can under your circumstances. Now, some people are saying this is a bit of a hollow victory because although there's been an interest rate cut, doesn't really save much on your mortgage. So for example, for a $600,000 mortgage, you save around $92 a month. For a $700,000 mortgage, you'll save around $115 a month, a bit over $25 a week. For $1 million mortgage, you'll save around $150 a month. Now, it's not life-changing, but as my dad always said, it's better than a poke in the eye with a blunt stick. What is really interesting around this interest rate cut, though, is that it seems like the RBA didn't really want to lower interest rates. Take a listen to this.
There's also a lot of uncertainty around the global outlook at the moment. One of the things we're cautious about is the possibility that policy unpredictability could lead to slower growth. But at the moment, it's too soon to tell. For these reasons, I want to be very clear that today's decision does not imply that further rate cuts along the lines suggested by the market are coming.
Now, I personally think that they lowered interest rates a little bit too early. I did a live stream on this topic a few weeks ago, and my reason behind this is the trimmed mean, which is a measure of inflation that reduces certain volatile items. So this trimmed mean is still above the target band. The RBA wants inflation to be around the 2 to 3% band, and the trimmed mean, although it's decreasing, is still at 3.2%, so it's not yet in that band. Another factor is that the employment data, the employment job market, is really, really strong still in Australia. What that means is that there's less competition for jobs. And when there's less competition for jobs, sometimes employees can argue for or negotiate a higher pay rises. Now, this is really good for Aussies and for the Australian economy, but it can also have inflationary impacts as well. Another couple of reasons why I think they lowered rates a little bit too early is that the tariff impact that the Trump administration is starting to impose. This is still largely unknown, and this could have inflationary impacts on Australia. And in addition, if you can remember way back when the former Reserve Bank Governor, Philip Lowe, when he was raising interest rates, how much flack, how much criticism, how much pressure he got during that process in raising interest rates. It would be terribly embarrassing, I think, for the current Reserve Bank if they didn't get inflation under control and they had to raise rates again. That would be a horrible outcome for them. So I think Michelle Bullock and the RBA will be very cautious in lowering interest rates and make sure that they are tackling inflation and it's stamped out before that we see more interest rate cuts. So simply put, my forecast and my estimate, if I had one bucket of more interest rates suggested by some of the big banks, or one bucket with fewer interest rates, my personal prediction is that there's going to be less interest rate cuts moving forward. But all in all, anything that puts more money in the pockets of Australians is a good thing. So I'm glad this rate cut has occurred. Good luck out there, guys. If you're going to do a bit of shopping around for a better interest rate, good luck out there. And I'll see you in the next video.